What if I told you UnitedHealth Group's wild 55% crash could be the very opportunity that makes you rich? Is UNH stock about to leap 50% higher next week? From a CEO assassination to a DOJ probe and a surprise insider buying spree, this company has faced every nightmare. And now insiders are betting big on them and around. We'll reveal the DCF fair value range and share the exact buy and sell targets that could change your portfolio forever. Major turnaround. Over the past 30 days, UNH stock has experienced a steep decline followed by a dramatic rebound and then settled into a narrow trading range. In early May, shares started near $420 before sliding hard to a bottom just below $250 by mid-May. In other words, after a brutal drop, UnitedHealth found support and mounted a recovery. In December, the sitting CEO was tragically shot. Just when investors thought the story couldn't get worse, the CEO abruptly resigned. Rumors spread rapidly after a Wall Street Journal article claimed the Department of Justice had opened a criminal investigation into alleged Medicare fraud, sending UNH down to 5-year lows near $280. Amid this chaos, veteran insurance executive Steven Hemsley, who briefly returned as CEO, boldly stepped in and purchased $25 million worth of UNH stock in a single day. While the herd was dumping shares in fear, Hemsley went all in, echoing Warren Buffett's mantra, "Be greedy when others are fearful." Legendary investor Peter Lynch used to say, insiders only buy for one reason. They believe the price will rise. Let's look at the numbers. UnitedHealth generates over $400 billion in annual revenue. Operating cash flow stands around $25 billion each year. UNH stock trades at under 10 times free cash flow. If the Medicare fraud probe results in criminal charges, a guilty verdict could lead to debarment from serving federal programs. Americans cannot afford large medical bills without coverage. That demand is unlikely to disappear. On the contrary, it grows every year as healthcare costs rise. The only logical explanation for UNH's recent price collapse is panic, not a fundamental flaw in the business. A fair value gap zone on the chart spans roughly $450 to $750. With the current share price around $300, the stock trades well below its intrinsic value. For investors considering entry, a price dip toward the $280, $300 range could offer an attractive opportunity. But since some analysts predict the intrinsic values likes in $140, so I would not take the risk. For more, visit im-um.com. Exclusive research and DCF models.